Hello, Internet Capitalists. This is the Grand Tonto again coming to you from Bloomington, Indiana. And we have Benjo in Gotham City today. And as you can tell, both of our attire reflects the steel curtain, not iron curtain. That's the Cold War. The Pittsburgh Steelers, who got off to a big 1-0 start today on the backs of some stellar defense by TJ Watt, Cam Hayward, and company. Benjo, how are you today?
Pretty good. Well, I actually had the Steelers defense in my fantasy league,
Mm,
so they gave me a nice points boost with all those interceptions. And TJ Watt actually should have had two more strip sacks. Both guy called
yes.
for the penalties. Seems like it happens all the time. Nonetheless, shout out defense. Shout out the Wizard of Boz, Chris Boswell. All of our points, 6 for 6 with three 50-plus yard field goals.
Yes. Yes.
Pretty impressive from the Wizard of Boz. So go Steelers.
And Benjo, I think it would be safe to say that we desire to be the official crypto podcast of the Pittsburgh Steelers.
That is true. We have something in the works. Not really, but maybe. If
Maybe.
you're watching this and you have connections, let us know.
Yes, we have a high desire to do that. So
Official Pittsburgh Steelers coin. That's actually a good idea.
that's a great idea.
Yeah, team coins. There were fan
Team
coins.
coins.
There's some projects who did this, but we just make our own. That's the Steelers.
Yeah. Yin's coin.
Maybe as a segue, maybe a Pittsburgh Steelers coin would actually go up, unlike all of the other coins in the current market conditions. So with that, I'm going to pull up
Yes.
charts. And
Pull the
how
charts
are you
up.
faring? I actually have a few comments about this is going to the newsletter about how I'm feeling, but I want to get your take first.
My take. So
Yeah,
my take. I've reached an equilibrium of, you know what? I'm a long-term investor. I don't understand why they go up. I don't understand why they go down. But I'm a believer that both Bitcoin and ETH have their roles, and it will take time for those roles to pan out. So that's where I'm at. You know, the macroscopic conditions I continue to think will be a favorable tailwind. All those things are still positive, but we're just in one of those times where, you know, it's a kind of negative sentiment. And in a market as small as crypto, negative sentiment can go a long way, even if there's not huge whale pressure buying and selling.
Yeah, I like that take. I'm actually at a similar place because I was wondering, like, the general market sentiment is pretty poor. It is negative. People seem depressed. And a lot of this is because people have been in alts and they've pretty much ridden altcoins down 60, 70% from their local tops, which is pretty rough if you were in those. And
Yeah.
then, of course, Bitcoin, ETH, and other majors are languishing a bit. But I found myself not really depressed, and I was wondering why. And it really is because of this mindset of being a longer term investor. And there's people who get into the space and they don't know why they're holding what they're holding, buying what they're buying. So whenever it goes down, they're like, oh, look, it's down this much while stocks over this period are up. But if then you annualize the returns and look at crypto returns over like a decade long time period, they outperform. And I saw a tweet actually from Ansem, the Solana bull, nonetheless. He said volatility is the price that you pay for outsized returns. And I think that's right. If you have to experience endure this volatility, and then you'll make these large moves up within a period of weeks. So that's what we're going through. And actually, I feel pretty good. Cheaper coins means you have extra cash. Like, I'm buying here. If you know why you're buying, you know why you're in your market. It's a good place to be. So that's
Yep.
my.
So that reminds me, Ben, one thing that there's an experiment that's playing out this month finally. So as I talked about many episodes ago, my thesis here, which I didn't do a really good job of sticking to, but was to buy, farm, stake.
Hmm.
All right. And finally, I have 4 protocols where I have reasonable amount staked. 5 protocols now, actually, reasonable amount staked. And at the end of September, I'm going to be able to report back on, you know, my return on those. And maybe one and a half of them, I'll say, are actually like traditional LP stakes where it's, you know, ETH had to be involved. The rest are sort of just coins I got at Airdrop. So I'm going to report back my earnings on that for the month here in a couple more episodes.
I like
And
that.
I'm hoping that's going to be around $2,000-3,000. We'll see.
Yeah, I hope. I'm happy that you understand your temperament as an investor for sure, because you have a lower risk tolerance than I do for sure. and the volatility to you is more unbearable than it is for me. So I think that like really speaks to where you need to be as a crypto investor. You know what you're good at, you know what
Yeah.
you're doing, you know what you can take, and that helps really clarify and define your purpose. Because otherwise, you'll be taking trades and then you'll make bad decisions because you're overly emotional about how the market's moving and what's going on. So just play the games that
Yes.
you're good at. And so that's good that you know that. Yeah, and for some clarity, I told him to buy a coin. The shout out EtherVista coin. I saw it. It's a novel DEX on Ethereum. They have some innovative products. But I liked the buy. I told him to buy it. We had some volatility downward for a bit, retraced about 20%. Tonto couldn't really hold on, had to sell some of it, but you ended up being in the green on that trade for what was it,
Yes.
0.1 ETH?
0.1 ETH in the, and it was the amount of anxiety I had for what really amounts to like a hair's width amount of my portfolio was
Yeah.
unbearable. I'm like, this is stupid. Why did I listen to him? I
Well,
need to do what I do and let him do what he does.
it's because you had no conviction in the trade. Also, like
None,
I asked,
none.
then you were arguing with me about it, and I said, "Did you read the white paper?" Because you were getting annoyed that I made money because the coin went up, and I was like, "Did you read the white paper?" And you told me no. So that
Right.
speaks to it. If you're going to buy something, know what you're buying at least. But
So I can
fair
say this now, Ben, for sure. Everything that I'm invested in now, I have heavily researched, and I don't want to call myself an expert, but I think I know more than the 50th percentile. So I'm happy about that.
That's good. I mean, honestly, in
Yes.
crypto, the 50th percentile is not very hard. You go into Discords, into Telegrams. I'm in the still in the EtherVista Telegram because I'm holding a small position still, even though I did take some profit. And these people don't understand. They think they're buying a meme. Actually, most of them. It's kind of what you thought too. And I'm like, it's not a meme, but
No.
it's interesting. Most people do not know what they're buying, and that speaks to it. Know what you're buying. Understand your time horizon, how sensitive you are to volatility, and that is my official advice for the crypto investors for today, because these are nasty markets and you have to be psychologically equipped to deal with them for sure.
Now, while that was official advice, it clearly was not financial advice,
Yeah,
correct?
yeah, that was official internet capital
Right.
advice, but it is not
Not.
financial, tax, or other forms of legal advice because
No.
we are not certified to make those kind of judgments.
We really don't know anything.
That is true. You'll again, you'll lose all your money if you listen to us.
Right. Right.
That's our slogan. But all right, quick look at the charts. ETH basically retraced that entire move up that we made. We're just sitting exactly
Mm.
where we were in like January, February, and like a lot has happened through then. Like I'm happy that I hold a lot of ETH, but sold some coins through there, some altcoin positions that I had at the beginning of this move up that benefited. Made some airdrop money, did some other stuff, and now we're kind of just sitting back there. So it's feels like we've come full circle, and ETH's getting a lot of hate, honestly, and that's something we could talk about, which is interesting. But it seems the FUD is at a maximum right now for Ethereum.
It does seem that way. It does, and it's fun because not that because anything bad's happened. In fact, the Ethereum technology has improved tremendously. It's proven itself over and over. It's just that there's nothing hyping it. It's not negative. It's nothing hyping it, and tokenizing another asset just doesn't do it right now. So,
Yeah,
it is sort of just blah right now.
pretty much. Yeah, pretty much. And that's kind of where the markets are. I think markets hate uncertainty is the one thing. And going to the election, there's a lot of uncertainty. First of all, the one presidential candidate, the Democratic nominee, Kamala Harris, it's not exactly clear what her policy on crypto is. Like, people are assuming it's going to be negative just because of what's happened with the Democrats so far for the last 4 years, and also some other indications regarding who she's appointed for key economic policy advisory positions. But we really don't know because she has not made a straightforward statement. So that's uncertain. We know Trump likes crypto, but again, we don't know if he's going to win. We don't know if he's going to rug pull a bunch of people with this DeFi project, which we're going to talk about again.
Oh my lord!
Lots of uncertainty, lots of volatility, and markets don't like that. So the stock market has been retracing a bit too. So
Mm-hmm.
markets are a bit fragile at the moment.
Agree.
So I'm waiting for an uptick in global liquidity measures over the next few years again. And I think we're going to see quite the risk asset rally over the coming 4, 5, 6 years. But for now, sit on your hands. If you have positions you like, do that. If not, you should probably get positioned. And that's what I'm doing. But again, not financial advice. But let's continue. We don't have to look at any more charts today.
No.
First, I'll just read the intro to this, and we can actually start with that. So this was from my midweek newsletter. So GM Friends, Trump's new crypto business partners. 1, the founder of Date Hotter Girls, LLC. 2, the creator of a previously hacked crypto project. And those are some of the people who helped build this. And there are some legitimate entrepreneurs and crypto market participants associated with the project, but it also includes these people. So very interesting for sure. What did you think whenever you first heard those facts?
I didn't bat an eye, honestly. I thought, that seems like par for the course. And I think I clicked on the link and looked it up and kind of thought, par for the course. So, yeah.
Yeah, so to give like an official overview here, so Donald Trump's upcoming crypto project, which is called World Liberty Financial, has ties to a recent $2 million DeFi hack through its team members, many of whom previously worked at that hacked project. And the project was Do Finance. So if you're familiar with that, it's those guys. And then the other thing that we got a whiff of this week was that the white paper revealed that World Liberty Finance is going to be a decentralized lending platform that's built on top of Aave somehow. So we're not exactly sure what it's going to be. If it's going to be like one of these more CeFi products where it uses DeFi on the back end and gives you like a app on your phone, like you're not self-custodying anything, but you can access DeFi yields. So that's kind of what people think it's going to be, but we don't know yet. And that's as much as we have right now. But nonetheless, an interesting development.
Yeah, I think that's kind of smart. It looks like looks like white label Aave. They're not going to fork it. They're going to white label it and just put a new front end on. And I think that's probably a smart thing.
100%. Yeah, no, it definitely is. And the other thing here, the last thing to note, if you're interested, they're going to have a token, but it's non-transferable. So this is probably to escape the regulations and the scrutiny of the SEC in the United States and Gary Gensler, because I feel like Donald Trump having a token would be a very prime target for him. So
you think so? Yeah.
Yeah. So it's going to be non-transferable, which is interesting. And I assume they're just going to do this, and this will probably be changed. Like if he wins, and he can just change the rules. And obviously, the regulatory agencies are under the executive branch, so he'd have some sway there. But nonetheless, if you want to make some money, there might be potential here. If you want to lose some money, there might be potential here. So something to keep your eye on.
Yes.
Yep. Okay. Next thing, kind of on this theme.
Wait, hey Ben, hold up a second. I have a question.
Yeah.
You see Trump's tweet there at the bottom?
Let me go back.
The question was this: do you actually think he knows what the dot in front of @WorldLibertyFi means on that tweet? Because I'm voting he does not have any clue what it means.
Well, what means?
No, there's yeah, that dot right there.
This dot.
Yeah, that dot.
What do you mean what it means?
What's it do?
Why do you wonder if it's just because you can't start tweets with @ on Twitter, right?
I think means it's a not tag, no tag. It doesn't actually show up as a tag, even though you tagged them.
I think what?
Nothing.
I think you're misunderstanding. You can't do tweets that start with @ of accounts on Twitter.
Yeah, you can.
I don't think you can.
Well, maybe we'll discuss this off air.
If you're listening, please chime in. Let me know. I'm pretty sure I'm right, but I'm still confused about what you think the dot means.
The dot means that if people retweet that, it won't continually tag World Liberty Fi. They won't get like 1 billion notifications.
Interesting. Maybe you're right. You're on Twitter more than I am, but I thought you couldn't start tweets with @ is why people did that. But maybe I'm wrong. But interesting. A little bit of a side note there. Maybe Elon can let us know if he's watching. He's actually at the U.S. Open as we speak, though. I saw him on TV.
Do you know who else is at the U.S. Open? Do you know who else is there? Travis Kelce and Taylor Swift.
Not interested in them, to be honest.
Okay. Well,
not a big fan.
Fine. Continue, Please.
So, other thing that happened this week, Uniswap Lab settles with the U.S. CFTC for $175,000 on charges related to derivatives trading. And basically, what happened here is that the CFTC alleged that Uniswap allowed users to trade leveraged tokens through its liquidity pools, which violates commodities laws because they regulate derivatives. Um, Uniswap did not admit guilt on these charges. They kind of, I forget the legal term for that, but they did not admit guilt, and the $175,000 fine is tiny. But interesting to see the CFTC, which is historically regarded as a more friendly regulator in the United States, come after Uniswap Labs. So not sure what's going on there, but the good news is that there were a few dissenters within the CFTC who did not like this action. And I just don't like the tone this sets because it's kind of regulation by enforcement from the other big regulatory agency here in the United States. And there was no warning, there was no public comment period, no chance to fix anything. So not real happy about that, but this happened. Any thoughts?
Yeah, I mean, I think this is this is nothing. I mean, I suspect that this happens daily in a space that we don't follow. And also remember, yeah, there wasn't any comment period, none of that, but probably because Uniswap just settled. They said, yeah, we'll pay $175,000. We won't
Yeah.
do it again. It was a gray area in the law because it had something to do with out of US customers, something like that too, or
Yeah.
in the US customers.
So Uniswap Labs hosts a front end to the
Yeah,
Uniswap protocol, and that's the official front
yeah,
end. So that's the issue, and they
yeah,
probably have to remove this type of thing from the front ends. But this isn't really a problem because the front ends can easily be like set up on like decentralized hosting networks, which we have plenty of in crypto. So but I think that's what they're going after for. And as a crypto company, it's probably better to just accept these type of things and just say, yeah, hey, we won't put it on our front end. You're not blocking access to the protocol
yeah.
in any meaningful way. So I agree, not too much important there.
No. I mean, and look, it's a simple thing. Now every crypto company in the U.S. operates knows. All right, we won't do that. That's the rule. We won't do it. All
Yeah.
right, and
Well,
if they do it, they should be punished now.
well,
And
before,
yeah,
yeah,
I get it. I get it.
yeah, they should say before they just fine you and come after you. They should give you a warning. Be like, hey, take this down. If you say no, then like, yeah, but and still like what why again this is still a more like okay the people who are buying leveraged derivative tokens on Uniswap
I know.
are sophisticated financial actors. They don't need protected. Like what is this, who is this trying to help? It's actually only bad for US innovation and US companies and for the consumer who wants to access these products. Like it's not like your average
Yeah,
Joe is going on to Uniswap buying 2x leveraged ETH tokens through index co-op. Like that's not happening.
it's not. But also, I come back to the part was they settled. They settled for like a pittance. So there probably was more than we know. This has no lasting impact on anything, and it clarifies one aspect of the market.
I disagree. It's just stupid. It's a
Okay.
bad. The underlying principle is dumb because it doesn't matter what the content is. They just didn't give a warning and they're just restricting access almost arbitrarily to come after the space, and it doesn't make much sense to me. And you're right. It's not a huge deal, but it's just dumb. So I don't think I'm not too happy about that type of thing, and it's just causing unnecessary drama for U.S. based crypto companies. And again, it pushes. If you're going from an America first perspective, this just why would they keep operating here? It's so unfriendly. It's just pushing them off, and a lot of people,
Well, because we have more money.
are leaving.
They're not going to leave.
They are. What do you mean they are leaving? Have you seen the developer stats, the migration stats in crypto?
It'll until further notice.
No, they
Maybe
they are leaving. They are
I don't
leaving.
care about. I'm talking about the money, the capital
The capital.
that goes. The developers, I have no doubt, are leaving.
Yeah,
I don't
that's
think. I think. I
you don't
think.
want crypto innovation to occur in the United States. Like you don't. I think that's
Well, I think that's a. I mean, I was on a call yesterday. This was an American-based company. There's only one guy, or I don't know if it's a company, but an American-based thing. There's only one person on the call from the United States, and they're very successful. They were a couple in Australia, one in Canada, one in Eastern Europe. They want to have somebody in Asia. So I don't think. I think any crypto company is not going to hire a bunch of people in Southern California. I mean, it's not going to happen. But I guarantee you that the money that's going to go to this phase of crypto companies or whatever they are, and the next phase is going to come from Silicon Valley and U.S. investors. And BlackRock is going to continue to tokenize funds in New York City or Texas. But I just am a believer that, yeah, if the developers want to leave, they can make their stand. But it's still, unless we do something completely stupid, like outlaw crypto, like China, we're going to still have, it'll still be the nexus here in the U.S.
I hope so. I sort of have my doubts. I think we are well positioned to do that. But whenever there's countries giving extreme benefits like Dubai, places like in the Middle East, places in South America, which are probably less competitive, but they're giving these huge tax breaks, huge incentives for crypto companies to build there, maybe even in Singapore or Hong Kong. It does compromise that part, and it's just frustrating. That's all I'm saying. It's like,
okay,
you can say it's nothing, but it's just more hostility from the United States towards technology, towards innovation, towards the technology that really represents democratic and values of liberty. So it's frustrating. Is my point.
Okay, fair enough.
Okay. Well, one place the innovation will not be going is North Korea, but the North Koreans do like to participate in crypto through hacking protocols and now through social engineering schemes. So apparently, what they're doing here is that North Korean cyber hackers are using really sophisticated tactics to steal crypto. So what they'll do is impersonate well-known individuals and offer fake job opportunities in crypto to lure victims into installing malware on their computers. And through these type of tactics, they've stolen billions of dollars. So there was an official warning from the FBI of this, which was interesting.
Very.
Yeah.
Those wily North Koreans.
Yeah, so here was the official announcement from the FBI, which is interesting, but that was released this week.
What do you think the average North Korean does when they wake up?
I don't know. That's a good question. That is a good question.
You know what, man? That's who I should box.
Who?
Not him. Kim Jong-un.
I don't think that'll work out for you.
You don't think so?
I don't think he'll do that.
He's like a pudgy penguin in real life.
A little bit. Yeah. I don't know if he'd want to do that. He would. I don't think he'd agree.
You don't think he'd agree?
No. We can stick with Fred Krueger for now.
All right. Hey, this is a good story right here, though. This is really, when I saw this, I was not sappy. I was not sad. I was happy because this is a crypto company acting like grown-ups and doing what you have to do when things aren't going well.
Yeah. So what happened was, for the podcast listeners, is that Matter Labs laid off. This is the team behind the Ethereum Layer 2 zkSync, laid off 16% of its team, which could amount to more than 30 people. So it's a fairly large organization. And this has kind of come on the heels of the market downturn and their token not doing well, because they released the airdrop at probably the worst possible time in the market. We've been down only since then, and L2s have gotten particularly crushed over this time period. So I think they're funding their token allocation that they have to fund the company is much smaller than they had anticipated. So we'll see about that. I think zkSync is still doing some good things. They have some pretty crucial partnerships with the likes of Aave and Lens Protocol, which we've talked about before, with Pudgy Penguins. So I think they're pretty well positioned. But you're right, this is just a mini example of a crypto company kind of restructuring, downsizing to meet the current market.
I think in the same press release, Ben, they mentioned the first several elastic chain or L2s or what derivatives of zkSync like Superchain are going to be coming out soon. So that's sort of interesting to see.
Yeah, they are. That'll be interesting to see. There's this whole conversation on Twitter too about whether like these L2s on Ethereum are parasitic to the value of ETH and to the L1 itself. So we can talk about that. I don't think either of us are technical enough to have a really informed opinion on that specifically. but it is a conversation to be had. And there's some Ethereum core developers that I've heard who are really arguing about restructuring the Ethereum roadmap to focus on enhancing the scalability of the L1 now, because we focused on this L2 first roadmap, making like data availability very cheap for L2s, and that has made the L1 not as good as an experience, and it's really lagging behind other L1s. So that's one topic that continues to develop, and I think it's just an example of infighting while ETH price is down, but it is an interesting conversation.
Mm-hmm.
So let's see. Anything else you wanted to talk about? Honestly, not a lot of stories this week. Prices were down.
Yeah. So I wrote some stuff down. I wanted you to spend some time talking about EtherVista. Just like a really quick 1 minute overview of what it is, why it's different. How about that? And then I'm going to pull up my notes thing here and see what else I had written down.
Sure. I'll just pull up the app real quick. So basically, it's a new type of DEX, which
Yeah.
the one thing it does, for like a lot of people were treating it like a meme coin launcher, which it's not exactly a meme coin launcher, but it's good for that because what happens is that the liquidity, whenever liquidity is provided, is locked for 5 days, which is really interesting. So that kind of eliminates or reduces the risk of rug pulls at the beginning and incentivizes more liquidity provisioning over a longer period of time. Then also it charges an ETH native fee for every swap, as opposed to a percentage, which other dexes like Uniswap and Balancer do, which is a significant change and results in much higher fees for LPs. And kind of combining that with this locking mechanism incentivizes deep liquidity from the very beginning, from the token launch, and it has gotten off to a fast start because of that. And whenever that happens, you can kind of bootstrap liquidity for new coins super quickly. And if you can get trading volume to like a certain point after that period, and the positive flywheel is more likely to get going, and you get less scams, basically. So that's the one thing. And then the other thing they have is that their native token, Vista, which will eventually be used for a bunch of things. But what they do basically is $1, a fixed fee of $1 in ETH from every single trade of any coin on the platform is automatically used to buy back and burn Vista. So the token's value is directly tied to the trading volume, the trading activity on the platform at all times. Not through a fee sharing mechanism, but through this deflationary mechanism, which is really cool.
Yep.
And this is and the other thing to note here is that the way they implement this basically is that they have whenever you set the fee data, like what you want the fees to go to, you set a fixed fee for every swap for your coin, and then you can kind of point that to contract logic and have that fee do arbitrary things within a smart contract, which actually isn't something that other dexes do. They're not set up like that naturally. So what EtherVista did is set it up to do this burn mechanism, but you can actually do anything with that, and it makes it extensible, which makes it pretty interesting. And there's some innovative stuff you can do with that. So that's the first part. And then the second part is that they are also natively going to integrate flash loans. I'm not sure if you know what flash loans are, but they're loans that you can take and pay back with a trading bot, essentially, all within one block. So you have to take it and pay back within one block, and they're really good for arbitraging, and they make markets more efficient and things like that. They're also going to have futures and a lending market directly integrated into the DEX for the tokens that are launched on here. And so the idea is once you can bootstrap this liquidity, it'll automatically graduate at a certain point once enough liquidity and market cap is attained to these other products. And you can kind of really set up a token for a very successful launch. And all these things together is why I like the product, first of all. And then they just have this really fun, like Microsoft style interface.
Yeah, I hate the interface. If I wanted to be in 1997, I'd go to 1997.
You guys are so wrong. Okay.
No, I lived through that. I lived through that. There's bad memories. There's bad memories of that interface.
It's just like the Cybertruck thing. Everyone keeps telling me like the Cybertruck is ugly. Like no one, like that's the point. Like you miss it. It's the point. It's interesting. It's different, and I think they are going to update it because people do complain because people are like, oh, it's too hard to use, whatever. But it's like it's fun. It's interesting. It's different, and eventually, once they have these other features, it does need to be easier to use. But I like the idea behind it. So
Let me ask you this. Something you said made me start thinking. So if protocols like EtherVista use token burning or and buybacks and burning to reduce supply, increase price, it seems like that's definitely not a security.
yeah, yeah. I mean, it depends. It depends. If you're using like the Howey test, it's like it has to be if there's like a expectation of profit from the efforts of others and things like that. So it depends what
Hmm.
criteria you're using. So it still could be, I guess, but it
It
definitely
seems
reduces
like the current
that, you
it
know.
seems like the current market would ascertain you to say that there's absolutely should be no expectation of profit at any point in time.
I mean, yeah, but
I
because
got you. I know what you're
prices
saying.
are going down. But it's like it is true though with all of these things that like they're protocols that are decentralized. Even if you are doing fee sharing with the token through like staking or whatever, it's like someone
Yeah.
wrote the smart contract, but it's happening automatically to some extent. Sometimes it's not. Sometimes it has to be triggered.
Yeah.
But yeah, so it's interesting. But I like it. I made some money on the coin, which I was happy
Yeah.
about. We'll see what happens to it moving forward. But I thought it was like one of the first more innovative products that I've seen in crypto, like an iteration on like classic DeFi that I kind of liked and was at least
Yep.
entertaining and interesting. So that's why I
Yeah,
liked it.
I agree with that. I mean,
Yeah.
I think it's cool to see that these guys are thinking long term, right? This is the beginning of a multi staged rollout of not just a lending market, not just a DEX, not just pump.it or whatever that thing's called, but it's everything rolled into one, an integrated package.
Yeah.
I have no idea if it's going to be any good, but it seems like another way to think about things.
Yeah. No, they're just trying something else. And to be honest, like we've had the same kind of DeFi models tried over and over again, and it was getting kind of boring after a while. Like there's only so much that you can do. So trying out new protocols, new mechanisms is always fun. And whenever one actually has some fundamental value or like something that's different or unique, that's real is interesting. Because I remember last cycle you weren't around for these, but we had this thing called Olympus DAO, which basically tried to make a decentralized reserve currency through its own token. And you've actually been exposed to some of the mechanisms it's used because people have taken some of them. So it's like this bonding mechanism. However, basically you can buy the native token at a discount, and
Hmm.
then they vest over time. So that was originally Olympus, but there was actually no product. It was just like financial engineering to basically make this happen. But then they integrated those innovations into, let's say, lending market tokens that are yield bearing or have profit share or something. But this one, EtherVista, actually has a core product that's potentially useful, which I like.
Gotcha.
Yeah.
So, I'm brainstorming out loud here, though. I've often thought that there, like a lending market that offered no tokens, nothing like that, but good yields. That was only did like stables that was FDIC insured, so that normal investors would have some kind of protections of their if their money gets stolen or rugged or whatever.
Yeah.
And the context there is what made me think of this is, oh, people say, well, it's crypto, it's crypto. Well, you know what? There's no difference between the software that runs crypto and the software that runs banks. Can't they all get hacked? Can't they all get stolen? So I don't know how to do that. That's not my area, but it seems like that would be a dead simple product that people might like.
Well, the thing here is that that are you can use like permissionless decentralized lending markets that exist, like Aave, for example, which is not centralized, not like FDIC
Yeah.
insured per se. But if you're using USDC, it's not the cash that Circle holds is FDIC insured because it's held in banks, so that's not going anywhere. But your funds, let's say like a known North Korean wallet hacks Aave and steals all the USDC, Circle just freezes it and burns it and gives it back because they can do that. So there's
Oh,
already
really?
like yeah, yeah,
Huh.
they have like all the centralized stable coins, USDT, USDC, other ones can be frozen, revoked,
Excuse
all
me.
of that. So yeah, but ironically, you're not gonna like this.
Excuse me
But
again.
you're not going to like this, but that might be what Donald Trump is building, actually, what you just described. So if that happens, that would be interesting to see if it's a legitimate product, but we will see.
So let me get this straight though. So Circle and I guess Tether have this. I guess Super DAI or USDS or whatever the heck they're calling the next generation DAI are going to have this capability, which seems like it's very investor friendly. It's what investors, at least in the US, are used to having some sort of protection that if their dollars get stolen, they're going to get their dollars back.
Yeah.
But
yeah.
it seems that exact same principle is frowned upon. At least it was last week when DAI said they can do something similar with their new version.
It's ends of a spectrum, right? Like the argument here, okay, we're biased being in the West because we have very robust banking systems and we haven't been tyrannized by a tyrannical government, at least in my or your lifetime. But over time, in almost every civilization, the government has become corrupt in one way or another. And this leads to one, currency debasement, which is the problem that Bitcoin and other hard asset cryptocurrencies are trying to solve, and B, capital controls. And the capital controls problem is the bigger issue. Because whenever this is like the problem with the CBDC. One, it's privacy. So like Circle, USDT can track everything, which is like they're a private company. That's probably a good degree of separation. But the CBDCs are the federal government being able to, they'll be like, hey, yeah, we don't want you to spend your money on this because we just don't want you to. So you can't. So we freeze it. And that's the issue. So it's you don't have to think about it until you do. And the people who call like the libertarian minded people, like you're just too paranoid. Like I think they missed the mark. Like read even a little bit of history, and these tools are definitely needed. So they should be available, and that's what crypto built out first. But to get to like mainstream adoption, you're right. No one cares about that. I still think both matter though.
So it's interesting, the Western bias, because clearly capital controls to me, I'm like, are you effing kidding me? It's my property. First, I can do what I want with my property without the government telling me what to do. That's like a given in my life that the Constitution will uphold that. And I guess other places, that whole mindset is not common.
Yeah. No, I mean, you just look at the trucker thing in Canada 3 years ago. That's a Western country. We bordered them. They're right next to us. We're very closely tied to their government. And they've kind of like, a lot of people think they're front running the United States. And I think we have a better system in place to prevent the type of things happening there. But they just froze funds. They just went to, I believe it was like Venmo or whatever private company, and they stole the donations that were given to those truckers and froze bank accounts, not only of the truckers, but of people who donated to them.
Does their constitution not prevent that?
No idea.
That is like absurd that could be the case.
Exactly. And this is why and this is like common practice in more authoritarian regimes across the world. Like we're very lucky to have a good banking system, access to dollars. And this is like points out the same thing. Like stablecoins are one of crypto's killer use case. It's funny. I wanted to bring this up. Tokenization, I still feel like tokens are the innovation. Everyone's like, where's crypto? Literally tokenization. Like stablecoins, we take them for granted. We don't really need them because we have access to bank accounts. All across the world, they're using stablecoins on like Tron, USDT as their day-to-day banking system to be able to access US dollars. Because whenever you think about it, to get access to US dollars in a different country, what would have had to happen is that a private bank, probably a legitimate private bank, a foreign bank, goes into one of these countries, has to like hold cash there and operate within this jurisdiction. And whenever the government is corrupt, they have no guarantees that they're going to make money. They're worried about what's going to happen, so they just don't go in there. But what you can do with these fintechs and with crypto rails is offer US dollars to people all around the world. And that's taken off already. And that's been the biggest use case. And then two, the other end of this is tokenizing every financial asset, because and the only thing hindering that is regulation. So we just need to get that through, because that's the natural use case for this stuff.
So, if we had smart foreign policy people, it only makes you want to support crypto more in the US, because it is a cheap as hell way to basically export our constitution and our way of living. It exports freedom without any cost. You don't have to buy missiles. You don't have to buy bombs. You don't have to trade hostages. You don't have to do any of that shit. Just support crypto, guarantee the right to have crypto in the US, and we export our value system, which it's not perfect, but it's
It's the best one.
damn good.
Yeah,
Yeah,
and it's
that's a way to think of. I love that way to think about it.
yeah. One thing that I heard, and this isn't really just relegated to crypto, but people say nowadays, like we stopped producing things in the United States, like physical things, like 20 years ago. Like we make technology now, and that's
Yeah,
good. So we export like technology and like information knowledge and stuff like that. So it's definitely technology is our biggest export. But then right up there with it is the US dollar. It's like the stability and the culture and everything that in our legal system. And we export that stability and like the guarantee of property rights through the dollar.
yeah,
And that's like our best product over time. And as we're accruing all this debt, we need the dollar to remain strong. And we need
yeah,
people to want our debt and want to hold the dollar, want to hold US dollars and US dollar equivalents. And stable coins are like the next, it's so obvious that that's the next natural progression. And it's the easiest way to get that to millions of people across the world,
yeah,
billions of people. So you're right. And actually, former Speaker of the House Paul Ryan was on Bankless a week or two ago talking about exactly this because he had an
yeah.
op-ed in the New York Times saying that this is what we need to do. We need to export the dollar using crypto rails. And imagine if we had pro stablecoin regulation. We're like, hey, like, look at this. We want to get stablecoins into as many hands of people across the entire world as possible. Imagine what would happen. So
It would, yeah. It, it it's amazing. It's funny, and that starts to answer questions to me. Like we get so lost here in liberal, conservative, Republican, Democrat, where people around the world. And I've asked a guy from Russia and a guy from South America in the past 2 months, why did you come here? And he's like, what do you mean? It's
yeah,
obvious. I can. The one guy said, I can do whatever I want here.
yeah,
The Russian said that I can do whatever I want here. And the South American guy was the same kind of response. It's like, well, at least here I control my destiny. And they look at you like you have three heads when you talk about, well, there's this, there's that, there's the other thing with the Republicans and the Democrats. They don't care about that. They care about the idea, the American idea. They still care about that. And coming here right now is the only way to get there. Like exporting our culture through our values through stable coins and crypto seems like a heck of a lot more cost effective way to do that, and continue to help the US.
yeah. No, I definitely agree there. And again, this is where like you hear whenever I bring up like getting frustrated with these regulations, it's because I'm frustrated because like there's no alignment. There actually is very little alignment between at least over the last 4 years. I don't really remember much from Trump's first administration because I wasn't much into politics. I was younger, but there doesn't seem to be much alignment between like core U.S. constitutional values and what specifically the regulatory agencies are trying to do in the United States because they're just coming after innovation. They're coming after liberty and freedom promoting technologies, which I see with crypto. They're stifling innovation on the AI front, and overall they're making it difficult for one, innovators to build things, and two, to access freedom promoting technologies, which seems backwards. And that's why I get so frustrated
Yeah,
because yeah. And I think that again, I've said this before, but I think the only reason that I honestly think the only reason crypto wasn't completely banned like after FTX is because they had to basically take us to courts, and the courts still operate on the basis of the Constitution, which upholds our rights to private property, to freedom of
yeah.
speech, which crypto is protected under. So, um, yeah,
Ben, imagine if the US government said, okay, we're going to embrace crypto, but if you're not a US entity, you have to pay 1% of whatever you borrow. You get 99% of the dollar you borrow in stable coins. I
mhm.
mean, let's turn this into what we do best, capitalism.
Yeah, there's all kinds of ways to make
Yeah,
this work, and I just don't understand the hostility. So every time I see it,
yeah,
this is counterproductive. It is what it is, though. You're right. I still think people do want to come here, and people who
yeah,
want to do things still want to come here for the most part. And we've been shooting ourselves in the foot over and over again, slowly over time. But we have a strong culture for builders, and that I think we still lead the world there.
yes.
So hopefully that persists. Hopefully they become friendlier on crypto. Hopefully this election cycle turns out well in terms of the pro crypto candidate winning, or the who knows, maybe Kamala is also crypto friendly enough. But we'll see.
Agree. Well, let's move on, Ben. And this is something that I just saw this week that I want to bring up that was so novel to me that I shot you the text. And that's the team behind FriendTech just basically signed all their contracts to the ETH-L1 null address, which essentially locks them forever, and have walked away from it. And I remember when I first started getting actively involved in crypto, beginning of the year, end of last year, FriendTech was hailed as like a great airdrop, how things should be done, great future. And in less than a year, it seems like it's gone to hell in a handbasket. And I guess people were just after it for the airdrop, and then they all abandoned it.
Yeah. Well, first comment there. This is why you don't listen to random people on Twitter, because like whatever the big thing is, it's most likely going to be gone in a few weeks. And if you're hearing about it on Twitter, you probably missed the trade. So
Yeah.
that's my comment there. But yes, FriendTech was big. I remember like we were still like pretty deep in the bear market, and it was like the first interesting thing to happen because everyone was waiting. Like we were like, we're gonna get SocialFi next, like crypto social networks, which being censorship resistant and decentralized might be important, as we've seen with the Telegram stuff, but that's for the side. But people were like, this is cool. We're going to find new ways to embed finance into social apps. There was a FriendTech frenzy. People made a lot of money buying shares of different people, which is how FriendTech works. You can buy shares of someone's account. It used as a bonding curve. So like the more popular someone is, like the more and more you have to buy their share for, basically. And then it kind of had a frenzy of about a month, I would say, and then it wound down. They went on to develop version 2, which launched not that long ago, maybe like a couple months ago, and then it just did not do very well, and people have completely forgot about it. So it's interesting to see that they renounced the contracts. It seems like they're kind of just giving up, I guess. So
yes, that's what it says.
Yeah, so so that's interesting, I guess. It is a shame that didn't pan out, because I would like to see some innovative crypto social apps come out that actually do new and interesting things, apart from just being like decentralized and censorship resistant, which is good, but not nearly enough to get me interested. So who knows? Maybe it was a good first step. Maybe someone will take something that they did, put this kind of like buying keys through a bonding mechanism for accounts into like a broader ecosystem of apps with better functionality. And on this topic, you remember Farcaster too? Like Farcaster, people were saying like people were actually calling Farcaster crypto's first breakout app before Polymarket got big, which Polymarket probably is like it is crypto enabled, but it's not exactly pure crypto. But people were saying Farcaster was big, and it didn't really pan out that much yet either. So any thoughts on maybe what it's going to take to what you would like to see? Like what would it take to use crypto social like every day? What would it need to be like?
All right. Well, I don't know if it's a social, but we've talked about this. I rail on game apps, but I'm the game guy. So I would use my game even more if I got paid a little bit to play, and I could use what I make to buy stuff. So that to me is a simple thing to do.
Yeah.
On this topic of FriendTech and Farcaster, and I don't think Farcaster is this far gone yet, but I actually love to see these companies end. I love this creative destruction. This is the destruction phase, but somebody's going to learn from this, right? And they're going to figure out the next generation. And it's going to take those kind of cycles. You know, Farcaster is great from when I looked at it, but it's like, didn't reach critical mass. I stopped going there. You know, I'm not going to worry about it. I think Farcaster, I thought their programming language thing was really cool, but it was way too geeky to get mass adoption, right?
Yeah.
It was too soon, too geeky for me. So that's fine. There's something there. Maybe they didn't get it right. Maybe FriendTech didn't get it right. Things like that. You know, one simple thing, just looking at this thing here, one thing that would get me is if I got paid in a small USDC for links I clicked on directly instead of it going to a third party in SocialFi. Facebook integrated that. I'd probably be more akin to go to the advertisers then, for example. But big picture, you know, feel bad for the FriendTech people, but shit happens. Let's go on. Let's get FriendTech 2.0, which is even better.
Yeah, no, I agree. I think that's a good takeaway. Someone will learn from it, like you said, and use something they did in their interface and their point system and their bonding curve mechanism for the keys. they'll build on it, and hopefully we do get something crypto social that's interesting, like integrated with payments, or I don't know, something interesting where maybe like advertisers can come to the platform and everyone who uses it basically gets rev share from advertisers based on like how much they contribute, like if they run no, I'm just brainstorming saying stuff here, but I think that would be interesting, so maybe someone could figure that out.
Yeah, they give well-versed reviews of products. Amazon could do this.
Yeah,
Everybody could do this.
yeah,
Um,
we'll see. I
Ben,
think
thinking of
you can go.
the more I think about it, if I was 30 years younger, I would have done crypto instead of robotics for the companies I started. It's so much the same. When we did robotics, everyone thought robotics was kind of a hoax, or not a hoax, but no big deal. It's the same right now with crypto. All the bad ideas, which were good ideas, are coming out. Everyone thinks it's over. Now is the great time to start something and to
Yeah.
start down this path, because we're getting to the second generation of ideas now. The first generation's failing, so we're going to get better ideas now.
I'd say we're in like the third generation probably of ideas, and it is true that
Okay.
like it's a weird market too here, because crypto is weird because you can look at like prices as a proxy for like interest, which is definitely true. But then there's also like developer interest cycles where like you look at developer counts, and even in bear markets, sometimes that increases and sometimes it doesn't. And like I don't even know what kind of market environment we're in terms of coin prices. Like it wasn't necessarily a full blown bull market for sure, but we ran up pretty significantly, and now we're just sitting in this weird spot. Um, but yeah, no, generally I agree. I think that again, like it comes down to the first principle that crypto is an open network where everything is open source by default. So
Mm-hmm.
whenever something is built, people learn from it every single time. Everyone in the ecosystem sees it, learns from it, and can reuse certain aspects of the code of whatever it is. And I think that's good. And we are, I think, on the next phase of development in multiple sectors like DeFi, like crypto social. This is probably really the first generation of crypto social that we have, I would say. We really haven't seen much before Farcaster and FriendTech. So yeah, a lot of time. It's early. I think you're definitely right about that.
Mm-hmm. And Ben, the next thing that I wanted to talk about real quick, because we're getting on an hour here. I know I said earlier that I'm not really worried about the U.S. losing a leading position in innovation, but there was a tweet I saw that the Qatari government, Qatar is a small country in the Middle East that has very rich natural gas reserves, very wealthy country. They're adopting a crypto-friendly framework, which I'm assuming is similar to Dubai's framework. Um, one thing that sort of could maybe be scary is that if these nations, which have these ginormous sovereign wealth funds, if they decided to enter the stablecoin game, for example, using whatever, I mean, they have tons of assets to back it up. Maybe those are all dollars. I don't know. But those are the kind of things that I don't think we can do in the US because it's a different country, different economy. But those are the things we got to look at and see, because those countries do carry quite a bit of economic power. Now, they have lots of cultural drawbacks to innovation and for large portions of ethnic groups in the world living there comfortably. But they certainly have financial capital they can bring to bear on these things.
Yeah, 100%. I think like you see this is generally an interest from these type of countries through like BRICS, who is a competitor to like the G7 intergovernmental coalition of countries.
Yep.
So BRICS is doing this type of thing for sure. Like they're trying to settle oil trades and other currencies other than the US dollar already. They're testing different things. And the other thing I would say is that I think as of the last, of course, I haven't been around to see nearly as much as you or older people, but it seems that a lot of these countries, especially like China and then some other countries are in Russia and others are following in the footsteps, but they have realized that free market capitalism is the way you get rich. So they're trying to like they've kind of stayed back culturally, and they're still very like authoritarian in cultural respects. But when it comes to free markets and capitalism, they've kind of adopted that because they want to make money.
Yeah.
So
Yeah.
that is definitely a threat because they're becoming more receptive to free market innovation ideas, even if culturally they are not. So
Yep.
I agree. And this is why it is important for us to have good regulation and promote innovation here. But I think our culture, our foundation, our constitution, our people give us a leg up. So,
Yep.
yeah.
Last thing, and I just sent you the link to this on the chat, Ben, if you want to try and pull it up. But EigenLayer this week announced their season 2 airdrop. I think it's 12% of the tokens. Well, let me back up. EigenLayer is in the top 5 now, I think, in TVL on ETH. It's gigantic. They announced their season 2 airdrop. All the tokens will be distributed, I think, by September 19th or 16th at the latest. And in our very first episode, we actually were out of the country to claim our Eigen airdrop. They have removed VPN and location restrictions, so you can now claim from anywhere, which I think is a kind of a nice thing. Now, it's a horrible time to do this. They're also going to enable transferability, which also means the markets will open up. You can sell these in normal markets instead of just pre-market. So anyway, one of the biggest apps on ETH is now going to have their second season airdrop. And just wanted to mention that really quickly. Thoughts on that, Ben?
Yeah, no thoughts. I haven't been using EigenLayer just because I think I might eventually, because I do want to stake. Like, I have a good bag of ETH that I just should be staking probably and not be doing that much more with. And then I play around with some of the other stuff. But EigenLayer is definitely like a core piece of Ethereum infrastructure, and it's going to be a key piece moving forward, especially in promoting and enabling interoperability between like Ethereum and other chains, different L2s, and offering all these services. So it is notable. No thoughts other than that. I wasn't able to pull up the article, but
That's okay.
you guys can look it up if you want to see it. But yeah, if you've used EigenLayer, check that out. More free tokens.
Yep. A final news on our front, we want to give another shout out to our friends at Ionic who have been posting our educational videos. I think the most recent video, Ben, which I think was on supplying, was really good way to get started using their app. We've got, I think that was number 3 or 4. We've got 6 or 7 more of those coming with them. Got some more instructional videos and some more technical topics we're kind of negotiating on, but I think they'll be very helpful. And we're trying to up our game a little bit with our interviews and starting to contact and go after some other folks and continue our founder series, which I love, but move to different aspects of the market. Maybe some TradFi guys that are stepping their toe in crypto and maybe some blockchain folks as well. So some exciting news there coming up.
Yep, definitely. And we'll be here. Keep it going. A lot going on, but last thing to leave off with, I guess, stay safe in the market out there. We'll recap to the beginning. Know what you're buying. Know what you're investing. Don't get worried about the volatility. Just know what you're doing out there and stay safe.
Stay safe, my friends. Here we go. Steelers 1-0, baby.
Yeah,
see you next week.
18-10. Sorry, Falcons. Sorry, Kirk. Tough way to start the season. I think Browns are playing the Cowboys right now. If Browns lose, we're going to be first in the division.
First place, baby. First place. Let's go.
Let's go. But
all right.
Thanks for watching. We'll see you guys next time. And that's it from us.